Hi friends, this is John Kingston from JR Trading Zone. If you are a trader, you must have heard the word stop loss. Stop loss is very important and it is inevitable in trading. Different traders use different methods of stop loss. Some traders tell they don't keep stop loss, they do position sizing. That is also a different type of stop loss. Okay, when people enter into the market, that is the beginners, they first study what is chart, how the chart patterns are working, and they directly enter into the trade. Any trader knowing chart or chart pattern cannot be a successful trader. The next few traders get knowledge from the experienced traders. That is, they attend the workshops, spend a lot of money, and they begin trading. Even though if you are trained from an experienced trader, you can't be a successful trader. This is because in each and every video, most of the video I have told you, trading is not about psychology, trading is not about chart patterns, trading is more about psychology. This video is for the traders who are trading in the market, but you are not profitable. Sometimes your mind gets frustrated, you can't tolerate, you can't take the stop loss. This is the first stage of a trader. If you are not able to bear the stop loss, if you are not able to take the stop loss in a positive way, you are a beginner or a novice trader. First, novice trader. Next stage is the break-even stage. You are making profits. You make loss also. But on the whole, when you go for a monthly P&L or yearly P&L, you are not making profit nor loss. This is the next stage of a trader. In the first case, the novice trader can't accept the stop loss and he will be fighting against a market. He takes a view and he is having a view, the market has to go up, the market will be going up. This is his view. He will be entering with the view. He will be keeping a stop loss. If his stop loss is hit, again he will shift his position down. Again, if his stop loss is hit, again he will be shifting his position down. He won't agree that he is failing or his view has gone wrong. That is the mentality of a novice trader. You should know where you are. You are a novice trader or break-even trader or a pro trader. The novice trader actually cannot accept the stop loss. His mind won't accept the stop loss. His view should be right. Until then, he will be shifting his stop loss or he will be creating again and again, he will be creating the same positions and he will fight against the market. His ego will never let him to compromise with the market. Always he will be fighting against the market. What happens to him, how he's shifting his stop loss, how he keeps his stop loss, I will be showing detail in a computer presentation. This video might be slightly lengthy. I will try to make it short, but it might be slightly lengthy. Next, if you are in a break-even stage, no problem. You make profit, you may make loss, but on the whole your P&L will not give any profit. That is the break-even stage, the next stage. You are accepting some losses, no problem, but again and again sometimes you may be taking trades here and there. Totally your P&L is not going down or up. That is the break-even stage. That is not a dangerous stage because each and every time when you are making mistakes, you are trying to learn something. You have kept a stop loss, it gets hit, you will be analyzing the chart. What mistake did I make in this trade? Or what are the patterns formed in this trade? How this trade gone against me? Or why this stop loss got hit. Is the range of the stop loss right or wrong? You will do lot of analysis after your stop loss gets hit. Then you are a break-even trader. Difference between novice trader and break-even trader: novice trader will not analyze the chart after the stop loss is hitting. After the stop loss gets hit, he never analyze. He can't see his PNL in red. He will get frustrated, angry, and he will shut down his computer and throw out his mobile. This is the beginning stage of a novice trader. He's egoistic. He's taking a view and it should be right. He can't compromise with the market and he can't accept his view has went wrong. But in the case of a break-even trader, he will analyze. He has studied some patterns, he has some strategies, but when it not works, he will go into the trade, analyze the trade. Analyzing the trade is the break-even stage of a trader. If you are analyzing your failure, then you are in the break-even stage. First stage, novice trader. Second stage is break-even trader. The third stage is a pro trader. Friends, I will tell you one thing. For the past 10 years, if you take the track record, only 10% or below 10% of the traders are successful in the market. Lot of trainers, YouTubers, lot of pro traders giving big courses. Why this percentage is not getting increased even now? Even now, only 10% or below 10% traders are successful. That is why I am telling, always I mention in my video that trading is not about the patterns, chart patterns, or any other strategies. Then you may ask me one thing: oh, we don't want to learn any patterns or chart or anything. Then how a pro trader is working, how he is working without knowing this? I won't say that you don't want a strategy, you don't want to know about chart patterns. It is very important and it is the basic of trading. Knowing the patterns, I can't be a successful trader. There comes the main area, the psychological area. Most of the people come with a small capital. In the beginning, if you get some failures, I will say that is good for you. But for some traders, if their faith is not good, if they are not lucky, all the trades will be very successful. They will be taking some positions without knowing what is going in the market, but the trade will give huge profit. Sometimes he is deploying 1 lakh and his capital doubles and triples within minutes and hours. That is very dangerous. That is where a trader gets trapped actually. Here how the psychology is working, actually he will think, whoa, how nice it is, how I am making money. Is this simple? How trading is very simple. It is nothing about what I have heard. Wow, very easy, simple and everything. And he will be borrowing money from his neighbors, taking loan, and he will do anything for doing trade. Because his capital is doubling, Here is the hidden danger. If you are coming with a small capital, if you get 1 or 2 failures, you will be alert and you will be cautious. You will try to learn something. But it's very dangerous if you are successful in the beginning. You should not be successful, I will say. You have to face some failures in the beginning. Then what is the solution? Where should we keep the stop loss? How the pro traders are keeping stop loss? This is the third important point. For each and every problem, I personally believe there is a solution. But mostly we are not searching the solution. We worry about what is happening and what is going on. In my life also, I have gone and faced a lot of problems. And each and every time I have my mind get frustrated and I worried and I worry about the situation, but the next moment I work on it. What is wrong with it? How can we improve our situation? What should we do? And how can we overcome the situation? Not only in trading, in life also we should have an attitude. The attitude, if you are having the attitude to search a way, definitely there is a way. Where there is a will, there is a way. Therefore, trading is related more to psychology, definitely. First of all, you have to see the stop loss as the cost for doing business. If you ask any pro trader, he will say that it is the cost for doing business. We should avoid the term stop loss. Instead, we should fix in our mind that it is the cost for doing this business. For a novice trader, trading is a gambling. The stop loss he can't suffer. It is a great attack against his personality, and his ego will never accept the stop loss. But for a professional trader, the stop loss is the cost for doing this business. Basically, I am a businessman. For running a shop, I have to pay rent. I have to pay for the employees. I have to pay electricity charge. I have to pay for the license. I have to pay sale tax. I have to pay income tax. I have lot other expenses. My traveling expense for the purchase, the transporting expense of goods. But do I take that as a loss? Do any businessman take it as a loss? He always take it as the cost for doing or cost for running that business, isn't it? You should also be able to take this stop loss as the cost for doing the trading business. For a trading, you are not spending anything, you just need a laptop, just need an internet connection. If you don't have laptop, no problem, you just need a mobile phone for trading. Therefore, the expense for trading is zero. Everyone are having a laptop, everyone might have a mobile phone, everyone might have internet connection. Then your expense is zero. The only expense you are giving is the cost, is the stop loss, and the amount is the cost for doing this business. When your mind is able to accept that particular loss as the cost for doing the business, then you are a pro trader, then you are a professional trader. I will explain where to keep stop loss, how to keep stop loss, everything that I have to go to the system. I will tell everything. But more than watching videos, more than learning books, we should try to transfer, or we should try to transform our attitude towards the trading. The main case is you should see trading as a probability. It is not a surety or certainty. 1 plus 1 is 2. That is certainty, that is max. In trading, we should see in the case of probability. It is not certainty. It can happen or cannot happen. It is like a weather forecast. All of you know weather forecast. It might rain or might not rain today. There are possibilities of raining. Just take it as a weather forecast. You are aware about the pattern, you are about the chart pattern, you are all set to take a trade, everything is okay. But you should always consider trading as a weather forecast. It may happen. The possibility is to rain, but there are many chances that the rain can be taken by the wind, isn't it? For many reasons, it may not rain. Therefore, you should always differentiate this between certainty and probability. Never come to trade with a certainty mindset. When I advise you never come to trade with a certainty attitude. No one can change their attitude immediately. You should analyze yourself. You should analyze your personality. If you are an egoistic person, if you are not able to change yourself according to the situations, then you are not suitable for trading. You have to go for some other job. If you are not able to accept the failures, accept the losses, then you are not suitable for trading. You should do some other business. It is not compulsory that everyone should trade and everyone should be trading. But I make videos because some people are highly passionate about trading, but they are not able to catch the right point. They are missing here and there, but they are working a lot. If you are working on your failures, if you are working on your losses, then you are going to be a successful person. So in this video, how we can play stop loss, how should we accept the stop loss, how should we see the stop loss, this is what I am going to discuss. A pro trader or professional trader always enters a trade knowing his risk. He knows if the trade is going wrong, what I am going to lose. He's not worried about the target. Actually, he's much more worried about the loss. Before entering the trade, he will be completely having a plan where to enter, where to exit, and where to take the profit. Let's go to the computer presentation where I am going to show how the novice traders are keeping stop loss, how a professional trader is keeping the stop loss. Let's come to the chart presentation. I'm not going to make this chart presentation very lengthy. Before entering into the trade, we must know more about chart patterns. Now just we have covered the subject, that is the support and resistance. We have studied about the pivot points. We have just studied how to apply the CPR. Okay, but knowing the CPR, we can't take any trades. We should know what are the patterns clubbed with the CPR and which patterns will work in which situation. If you are going and entering a candle, where will you keep the stop loss? That's a big question, you know. You see, we are just going to apply the CPR. On the basis of CPR, you are going to take a trade. In this particular day, right, the first candle is a big huge red candle. Here you have a CPR. In this area, you are not supposed to take trade at the CPR because mostly the trade may turn over, the candles can turn over and it can move upside also. There is high possibility of candles moving upwards. Only when the candle is closing here below the CPR, you can go for a short trade. Okay, you can plan for a short trade only when the candle is closing below the CPR. And where should you keep the stop loss? Definitely you should keep the stop loss here at this point above the CPR. Then you should calculate the risk reward. Here you are entering the trade at this particular point. Here you are entering the trade. Your stop loss is here and your target is this line. Always the next support line, next resistance line will act as a turning point. Therefore, your first target is here. You are entering the trade here. Your risk is huge and reward is less. It is not 1:2. So you are not supposed to take this trade. Always go for trades which is giving 1:2 risk reward. Why we should take 1:2 risk reward is a beautiful subject and I will explain in detail in a video. Now where will you place stop loss? Always below the protection. If you are going for a short trade, if you are going to short the market, you are going to trade here. You are thinking that here the market is, the candles are falling. It's just going up, not able to sustain. Again, it is going to fall. Right at this moment, you are going to take trade. Where will you keep the stop loss? Stop loss will be kept here, right above the central CPR. Now, where is your target? Your target is here, and it is nearly 1:2. You see, you are entering the trade here, and your target is here. It is nearly 1:2. Only to enter the trades which give you a proper and good risk reward, and enter the trade where you are getting a very small stop loss. Stop loss should be always protective, and stop loss should have a protection. Okay, we can go to this day. You see, candles are opening above the CPR. When it is opening above the CPR, mostly the day will be a bullish day. We all know mostly it is considered to be a bullish day above the CPR. Now, when this candle breaks R2, right at this candle, you can enter the trade. Right at this candle, you can enter the trade. Where will you keep the stop loss? The stop loss should be kept below the candle. You are getting a risk reward more than 1:2. Again, go to the tool of risk reward. You are entering the trade here. Always enter the trade after the candle is closing. You should have the patience for the candles to close. Most breakouts are false breakouts. More than 80% of the trades are false breakouts. So always take the trade only after the candle is closing. Okay, now you have entered this trade. Just we can calculate your risk reward. You see, you are keeping a target of this. Stop losses just below the candle. Okay, the stop losses just below the candle. Now what is your risk reward? Nearly 1:3. Beautiful trade. In this type of trade you can enter. You should keep the stop loss just below the pivots or below the support zone, above the resistance zone. Always this stop loss which we are keeping should have a additional support. Okay, this is how traders plan a trade. Professional traders plan a trade even before they enter. Here, beautiful day, candle open, not able to sustain, returning back to CPR, breaking the CPR. If you are having the view that market is going down, where can you enter? You can't enter here. The stop loss is very big. Always the candle can retrace and come here. You see, at this particular point, if you are entering, you can keep the stop loss just above the CPR. You see, the target is here. Always your risk should be small. Stop loss should be small. And if the stop loss is hit, you should leave it to the market. Never trade more than 1 or 2 trades a day. A novice trader will be continuously trading from 9:15 to 3:15. More you trade, the broker makes more money, not you. Professional traders take only 1 trade a day. Sometimes if they get opportunity, they take 2 trades a day. They are always systematic. They develop a system and only they follow the system. That is why they are professional traders. When you are a novice trader, when the stop loss is getting hit, you won't leave. You see, I will give a beautiful example for this. This particular day, I told you the candle when it opens above the CPR, the day should be considered as a, what we say, bullish day. According to our studies, when the candle is opening above the CPR, the particular day is going to be a bullish day. You see, what will a novice trader do? He will go long at this point. Where will he keep the stop loss? He will keep the stop loss below the CPR. Okay, below the CPR is going to keep the stop loss. What happens here? The trade is not working because he is keeping a target up to this line. It is not working. It comes and hits his stop loss. Will he agree? Will he agree to take this stop loss? No. Next, right at this point, if he see this green candle, again he will enter. And where will he keep the stop loss? Here, right below this candle. Again, what's happening? It just goes to CPR, returns back, and his stop loss gets hit. What will happen? His ego gets affected. He's not able to adjust with the market. He's not able to agree his failure, or he is not able to agree that his view has gone wrong. Right at this pin bar here, you see, again his mind is telling, oh, right at this pin bar the market is going to turn around. Again he will be taking the trade here, right at this pin bar, keeping the stop loss here. Where is the protection for the stop loss? There is no protection for the stop loss. The protection is below the stop loss. And whenever the market is going and showing some green signal, again and again this novice trader will go and fight with the market. Always remember one thing, market is supreme, not you. You can't fight with the market, and you can't do anything, and you can't succeed if you are fighting with the market. If this stop loss is it, leave it. This day is not yours. According to you, according to your analysis, the market has to go up. If you are having that view, if the view is gone wrong, you should accept it and get out of the market. Or else, if you are a professional trader, or some professional traders will just take the opposite position. Oh, now they know the CPR has broken. The market is becoming weak. Big red candles, only small green candles here. Again, big red candles. Here is a pin bar right at the CPR. They will just turn their view. The market is not bullish. It is going bearish. Definitely, they will take the opposite trade and they will trade like that. Some traders will close the system. They will go only one trade. If it goes wrong, leave. Next day, market is there. All the year, throughout the year, market is there. You should develop that type of mentality and changing your mentality and agreeing everything is very, very important in the market. Our stop loss should have some protection. Okay, I think you have clearly understand. If you are going long, your stop loss should be below the pivots or the support and resistance lines. It should be below if you are going long. If you are going short in the market, your stop loss should be above these lines, the pivot lines or the support or resistance lines, like that. So always consider this in mind. Never over trade. This is the second thing I will tell to all novice traders. Take one or two trades, leave it. You have to wait for the opportunity. I want everyone to calculate and keep a proper stop loss. Have a proper risk reward ratio. Hi friends, I think you enjoyed watching this video. From this video, you should know where you are. Are you a novice trader? Are you in the break-even stage? Or you are a pro trader? If you are a novice trader, you should come to the next stage of break-even stage, where you should correct your mistakes. Each and every time when you lose, you should analyze. Okay, then you become a break-even trader. From the break-even trader, the next step, you will be a professional trader. Definitely, you can be a professional trader. I remember a famous saying, you should be aggressive and defensive at the same time. That is trading in stock market. If you are not aggressive, you are not going to make money. If you are not defensive, you are not going to keep the earned money. This is a famous saying in stock market. So we have to learn more, earn more. This is John Kingston signing off from JR Trading Zone. Bye.